Welcome to Crypto Minutes, your daily cryptocurrency news for March the 11th, 2019. We source a minimum of 5 of the best trending articles of the day, from popular news aggregator CryptoPanic.com. Timestamps and the original articles can be found in the description links below.
World's biggest blockchain-focused ETF to start trading on London Stock Exchange. While most in the cryptocurrency community are looking forward to a Bitcoin ETF, independent investment management company Invesco, which has over $800 billion in assets under management, has announced the launch of the world's biggest blockchain-focused ETF. According to Zero Hedge, the blockchain-focused exchange-traded fund will include upon launch a portfolio of 48 different companies with exposure to blockchain technology. Some given examples were that of Taiwan Semiconductor Manufacturing, which supplies cryptocurrency mining machine manufacturers with chips, and the CME Group, the first regulated U.S. exchange to launch Bitcoin futures. It'll have a 65 basis points management fee, and include other firms like Apple, Intel, and Advanced Micro Devices (AMD). The head of ETF equity product management of Invesco in Europe, Chris Meller, reportedly stated the potential for blockchain to boost earnings was often not reflected in the share prices of companies such as Rio Tinto, the mining company that owns hydroelectric assets that could be harnessed for cryptocurrency mining. The report reads, "The ETF will initially invest in a portfolio of 48 companies based on a proprietary scoring system developed by Elwood Asset Management, a specialist crypto investment boutique backed by Alan Howard, co-founder of the Brevin Howard Hedge Fund." The CEO of Elwood, Bin Ren, noted potential applications for blockchain technology go beyond cryptocurrencies, as per his words we're beginning to see the technology being used by financial services companies in particular, but we expect greater application of blockchain technology across a wide range of industries. There are other blockchain-focused ETFs on the market, although most have attracted a relatively small amount of capital. Per ZeroHedge, the largest one, Amplify Transformation Data Sharing ETF, has $110 million in assets. Notably, investors have shown interest in Wall Street firms betting on cryptocurrencies and the nascent technology behind them. A group of 14 publicly listed companies with exposure to the crypto ecosystem compiled by Yahoo Finance, as covered, was outperforming the S&P 500 earlier this year. Founder of Ripple-backed startup pushes for mass XRP adoption at 3.3 million online stores. The founder of a Ripple-backed startup wants to bring XRP to the forefront of e-commerce. Weitzer Wind, whose company XRPL Labs recently received 2 to 3 years' worth of funding from Ripple, has created a bounty that will go to any developer who builds a plugin that integrates XRP with WooCommerce. XRP enthusiasts can contribute to the bounty, which has so far reached more than 3,000 XRP worth about $950. Used by an estimated 3.3 million websites, WooCommerce is one of the leading payment platforms on the web. It's designed to work on WordPress, which powers a staggering 33% of all sites on the Internet, according to data from web technology survey firm W3Techs. XRPL Labs is developing a decentralized exchange, mobile wallet and cold crypto storage operating system, among other blockchain-based initiatives. Last month, Ripple's investment arm Xpring gave an undisclosed amount of XRP to the company, which will allow Wind to work on the projects full-time along with 2 employees. Texas bill will require identity verification to use cryptocurrencies. A bill has been proposed in the state of Texas by Phil Stevenson that would require a person receiving cryptocurrencies as payment to first verify the identity of the person sending payment. However, according to the bill, verification is not required if the payment is sent by a verified identity digital currency. The bill defines a verified identity digital currency as a digital currency that allows the true identities of the sender and the receiver to be known before a person has access to another person's digital wallet. The bill, however, does not list examples of what constitutes a verified identity digital currency. It does note that to spread awareness, the Texas Department of Banking, Credit Union Commission, Texas Department of Public Safety, and State Securities Board shall collaborate to encourage the use of verified identity digital currencies. These agencies would work together to provide tools to identify which cryptocurrencies are acceptable or not, educate law enforcement on digital currencies, and promote the use of verified identity digital currencies. Fidelity's institutional Bitcoin trading and custody solution live with select clients. Fidelity Digital Assets, a division of Fidelity Investments, is making steady progress towards providing Bitcoin trading and custody services for large financial institutions, including hedge funds, pensions, family offices, and endowments. On March 7, the division announced that their services are live with some of these clients. Fidelity Investments is the world's 5th largest asset manager with over $2.5 trillion in assets under management. One of the firm's divisions, Fidelity Digital Assets, is bringing Bitcoin and cryptocurrency trading and custody to U.S. institutional investors. We have continued to build the technical and operational capabilities needed for securing, trading and supporting digital assets with the exacting oversight required by institutional investors, as stated in a January 31, 2019 announcement. According to the company, a number of institutions have reached out to the financial services giants seeking a trusted platform for engaging with Bitcoin and other cryptocurrencies. In response, the firm is providing a custody platform and trading venue, providing a combination of security and a central point of market access, disrupting the obfuscated nature of trading digital assets today. On March 7, Fidelity Digital Assets announced that Bitcoin services are live with a select group of eligible clients. Background on Fidelity Digital Assets. The Fidelity investments set out to experiment with blockchain and cryptocurrencies after witnessing a steady increase in interest from large financial institutions, especially around cryptocurrency custody and trading. To satisfy that experimentation, Fidelity Digital Assets was created, a product of Fidelity's blockchain incubator, the Fidelity Center for Applied Technology, around October of 2018. In order to build professional-grade solutions that would meet the demands of large institutional clients, the incubator team invested tens of thousands of hours and millions of dollars in development, product and systems design, and rigorous security controls. Problems with institutional custody. One of the larger problems that Fidelity Digital Assets is trying to solve are the issues with institutional cryptocurrency custody. According to the company's white paper, cryptocurrency self-custody is not palpable because of the regulations and legal obligations that large financial institutions must adhere to. As a result, self-managed hardware wallets, regardless of how secure, are not a feasible option. Allegedly, institutional investors do not want the risk of managing private keys for the cryptocurrency. That said, Fidelity Digital Assets is working to increase access to Bitcoin and other cryptocurrencies by providing the same level of custodial service expected for other assets, despite the regulatory uncertainty. According to the company in its October 15, 2018 release, we imagine a world, soon, where all types of assets are issued natively on a blockchain or represented in tokenized format. Addressing custody issues for institutional investors is one critical step in order for these markets to continue to develop. As the world's fifth largest financial institution, if Fidelity is able to provide other large financial institutions with access to Bitcoin, then it could substantially increase the appetite for the cryptocurrency and consequently drive adoption. SEC's crypto mum to Bitcoin holders, accredited investor laws need to change. An attendee at the 2019 MIT Bitcoin Expo on Saturday got a round of applause when he asked SEC Commissioner Hester Peirce, a panelist at the event, the following question. I think one of the biggest philosophical issues that many of us in crypto have with these types of regulations is around our chafing at the prohibition of retail participation. It may be hubristic, but many of us are not independently wealthy, but we still believe we can make good investment decisions. And right now we're kind of excluded from participating. So my question is, how can we move the accredited investor laws away from wealth thresholds, and towards something that's frankly far more reasonable and accessible to mainstream investors? Peirce, a crypto supporter, whom another audience member called a true visionary at the SEC for her work, responded to the question by asking participants at the event to share their thoughts on how to help change accredited investor guidelines. I love that question, and I wish that there were a lot more people like those of you in the room who are clapping. Our accredited investor rules effectively say that you have to have a certain wealth level or a certain income level in order to participate in certain types of investment products. I personally think that those rules are not consistent with what this country is about, which is about people taking opportunities, taking their talents and their intelligence, and applying it to make their lives better, and we've put this artificial barrier in place so people can't do that. If I were running the show, what I would do is, you could opt into the securities framework, if you want to opt in, otherwise you can be outside of it. And that means you better make your own good decisions, because if you make a mistake and you lose all your money, don't come crying to me. However, I have not yet convinced my colleagues that that's the appropriate way to go. So, to what you raised in your question, I think it's more likely that we'll think about ways that we can open up the accredited investor definitions so that there are other ways to show that you are able to handle investing in this area. Again, I chafe at that myself because you worked hard to earn the money. You're investing it. If you want to invest it in a stupid project, that's your choice. In any event, I think that there is an appetite for opening up the accredited investor definition to make it cover more types of sophistication. So, again, if you all have thoughts about what that would look like, let me know what you think the right criteria are. Peirce has been a strong supporter of regulations that will protect consumers, honor investors' personal decisions and bring crypto products to market. Remarking on last year's rejection of the Winklevoss Bitcoin ETF proposal, Pierce said she believes the SEC went beyond its statutory authority, and that the Commission should have allowed it to trade.
Thank you for listening to Crypto Minutes. This is not financial advice. If you enjoyed the articles, please click like, share and subscribe or donate. See you tomorrow, for more breaking news.